the aforesaid bill be read the second time. In accordance with the rules of procedure, the second reading debate is adjourned and the bill is referred to the House Committee.
Secretary for Financial Services and the Treasury. President, I move the second reading of the Inland Revenue Amendment Minimum Tax for Multinational Enterprise Groups Bill 2024. The bill seeks to impose a global minimum tax of 15% and the Hong Kong Minimum Top-Up Tax Hong Kong MTT on in-scope large multinational enterprise groups M&E according to the International Tax Reform Framework, Base Erosion and Profit Shifting BEPS 2.0, promulgated by the Organization for Economic Cooperation and Development OECD in October 2021. Currently, more than 140 jurisdictions, including Hong Kong, have accepted the reform framework to tackle BEPS risks arising from the digitalization of the economy. We have all along been supporting the global consensus on enhancing taxation transparency and combating tax evasion. Implementing the global minimum tax and Hong Kong MTT shows that Hong Kong is an international financial center and a responsible member of the global community. Under BEPS 2.0, in the subsequent 4 financial years, M&E groups with an annual consolidated revenue of 750 million euros or above in at least 2 years need to pay a global minimum tax of at least 15% in every jurisdiction in which they operate. This will reduce the incentive for M&E groups to shift profits to low or no tax jurisdictions to evade tax responsibility and minimize harmful competition among countries or regions to attract investment by lowering profits tax rates, thus creating a fairer taxation environment. According to the principle of the lowest tax under BEPS 2.0, if the effective tax rate of an M&E group in Hong Kong is below 15%, other relevant jurisdictions have the right to collect top-up tax from the group's low-tax entities in Hong Kong. Therefore, we propose to implement Hong Kong MTT, which enables Hong Kong to collect top-up tax from these low-tax entities in Hong Kong to bring their effective tax rate up to 15%. This will safeguard our taxing right instead of ceding them to other jurisdictions. It is estimated that the collection of top-up tax will bring to the government an annual revenue of about $15 billion from 2027 to 2028. M&E groups will also be spared the need to pay top-up tax in respect of their low-tax Hong Kong entities in other relevant jurisdictions in which they operate, thereby easing their compliance burden. In addition to the implementation of Hong Kong MTT, the bill proposes the collection of the top-up tax through the Income Inclusion Rule (IIR) and the Under-Taxed Profits Rule (UPR) under the framework of BEPS 2.0. The IIR imposes a top-up tax on Hong Kong headquarter M&Es in respect of their low-tax entities outside Hong Kong. The prerequisite is that top-up tax is not collected by the authorities in these jurisdictions. The UPR is a backstop to the IIR, which ensures that all top-up tax is charged where any of such tax is not brought into charge under the IIR. Some members may be concerned whether the implementation of the global minimum tax and the minimum top-up tax may undermine the appeal of Hong Kong in relation to business and investments. I would like to clearly point out that our competitive edge does not just lie in taxation. In a fairer global taxation environment, our competitive edge in attracting businesses and investments will be more prominent, including a mature financial market, an independent judicial system, modernized infrastructures, convenience in financing, a quality talent pool, high-quality professional services, and so on under the principle of one country, two systems, with staunch support from our country and connections with the world. These unique advantages will continue to make Hong Kong the top choice for global investors and provide enterprises with a stable and convenient business environment. In gist, the bill adds one part and 4 schedules to introduce the model rules issued by the OECD, provide for the implementation of the global minimum tax in Hong Kong MTT, and set out the commentaries and administrative guidances issued by the OECD as explanations for and supplements to the new provisions. The 4 schedules involve technical provisions. The OECD issues new commentaries and administrative guidances on BEPS 2.0 from time to time. Therefore, in order to allow updates of the legislation in a short period of time, we propose to empower the Secretary for Financial Services and the Treasury to, by notice published in the Gazette, amend the definition of the model rules and the schedules. Subject to the passage of the bill, M&E groups have to pay the Hong Kong MTT and IIR top-up tax in respect of the income in a fiscal year beginning on or after the 1st of January 2025. As for the UTPR top-up tax, having considered stakeholders' views and the situation of other jurisdictions, we propose that the commencement date be designated by the Secretary for Financial Services and the Treasury by notice published in the Gazette. Prior to deciding on the commencement date, the government will consider the situation of M&E groups operating in Hong Kong upon the implementation of Hong Kong MTT and the IIR, as well as the practice adopted by other jurisdictions. As always, the government strives to enhance taxation transparency and ease the compliance burden of enterprises, including the provision of sufficient flexibility in relation to filing tax returns and paying top-up tax. For example, in the first year, the deadline for any constituent entity of M&E groups to furnish a single top-up tax return will be extended from 15 months to 18 months. The payment deadline for top-up tax will also be extended to 1 month. To help taxpayers to ascertain their taxation liability, the Inland Revenue Department has set up a task force to provide technical support and answer inquiries. They will also issue an online guideline on commonly asked questions. In relation to the above legislative proposal, the government conducted a public consultation exercise between December 2023 and March 2024. We have consulted the relevant panel in InlandRev. I'm grateful to members for their support and their views for the bill. We have already incorporated their views while preparing for the bill. President, quite many jurisdictions implemented in 2024 or will implement in 2025 the global minimum tax and local top-up tax. I urge members to support the bill so that we will be aligned with similar economies to not only fulfill our international obligation in respect of taxation, but also safeguard our taxing right. Thank you, President. I so submit. I now propose a question to you that the aforesaid bill be read the second time. In accordance with the rules of procedures, the second reading debate is adjourned and the bill is referred to the House Committee.
This Council resumes the second reading debate on the Companies Amendment Bill.